Um, yeah, Scott Bessent famously has said in the past that, you know, 80% of a trade is macro, you know? And so I think for the last 3 years, most investors took that to heart and became armchair macro people. But what threw people off over the last 3 years was a few things. Number one, they were too grounded in like believing there's a science to the yield curve. Like the yield curve was inverted. Now, we explained at Fundstrat that the inversion was due to inflation expectations. Inflation was higher near term, so the nominal rate should be higher near term, but they would drop long term. That's why the yield curve's inverted. But everyone said it was a recession signal. Number two, I, I think what people got wrong is that we never had experienced inflation before. So everybody was anchored in 1970s as like the template, not realizing that we didn't have the same intractable conditions to cause inflation. So I think people were structurally bearish because they're like, curves inverted, there's a recession. Second, we have stagflation. And then they missed that companies were real-time dynamically changing their business models to deal with inflation and a tight Fed. And they delivered good earnings. So I think Fundstrat in our focus for our clients was, look, let's just find the best companies. They're not really going to be beaten up because of inflation, and that thesis proved correct.
In this video, Tom Lee will talk about market volatility and issues urgent warning. Buckle up. Let's catch him up to know more.
So this is really the reason 2026 is probably not as bearish as people think, because now next year, I think people are going to be like, wow, wait, NVIDIA and all these are public companies and their earnings are growing 50%. I think people are going to actually start chasing them next year. That's really positive for crypto because, as you know, there is also this argument today that the crypto cycle is a 4-year cycle, so it should be ending now. So
Yep.
people are trying to fade that. I think people are trying to fade everything, the S&P and the crypto, but forgetting that the Fed is beginning to cut, and the ISM, and we've written about this, is more correlated to Bitcoin than monetary policy. And until the ISM gets to 60, Bitcoin really can't peak. So I think this is pretty positive for crypto. But crypto, it's kind of been hurt because, monetary liquidity hasn't been really increasing. The Fed has been under QT, quantitative tightening. Yep. That's ending in December. And the Fed hasn't really given clear signals that they want to ease. So I think there's been a little bit of confusion for investors.
After a month-long slump, both NFT and meme coin markets are showing signs of revival, mirroring a broader recovery in crypto sentiment. Over the past week, global NFT market capitalization has jumped from around $3.5 billion to nearly $3.9 billion, marking a 12% increase. Similarly, the meme coin sector's combined valuation expanded by roughly 11%, rising from $47 billion to $52 billion. This comeback suggests traders are returning to riskier assets as optimism reemerges across digital markets. The NFT rebound, however, remains selective. Blue-chip collections such as CryptoPunks, Mutant Ape Yacht Club, and Milady Maker posted strong gains, with sales surging up to 80%. Meanwhile, others like Bored Ape Yacht Club and Pudgy Penguins continue to struggle, signaling that liquidity is still concentrated among top-performing collections. Blockchains like BNB Chain, Polygon, and Flow outperform peers, recording notable jumps in weekly NFT sales. In contrast, meme coins rallied broadly. Dogecoin climbed 8.7%, Shiba Inu rose 10.4%, and Bonk gained nearly 12%. Dog Whip Hat and Trump's official token were standout performers, each jumping over 14%. The widespread recovery underscores renewed speculative appetite and a tentative shift back toward high-volatility crypto assets.
And every time the S&P is down 2 or 3%, or AI stocks are down 5%, I think people get really cautious. I think, first of all, bullish sentiment is not even anchored properly. People become so hesitant. I think everybody thinks there's a top. Here's the thing. When everyone says there's a top, there cannot be a top. The top in the .com was because nobody thought stocks could ever fall. They actually thought we were entering like an era of continued prosperity. The second thing to keep in mind is that markets have been strong for the last 6 months. There is incredible demand for equities because people are really off sides. That's what you have to keep in mind. In April of this year, people thought we were facing Armageddon because of tariffs, and you had many economists proclaiming a recession, and that's how institutions traded. They were actually positioned for a massive bear. They can't fix that in 6 months. So we're now getting into year end where institutions, 80% are trailing their benchmark this year. It's the worst performance for institutional fund managers in 30 years, and they have 10 weeks to fix it. They're going to be buying stocks. And finally, visibility for AI has not even been affected by the government shutdown or anything. So companies are going to start, as they think about 2026, start making announcements. So I think in the final months, I think one surprise is the AI trade's going to come back strong because it's wobbled. But the Fed is getting people scared because was the Fed going to suddenly hammer down on things? But keep in mind, inflation has been softening. So if they cut in December, they're confirming they're on an easing cycle. Now that meeting's not for a few weeks, but that would be really bullish for financials and small caps. And by the way, what's correlated to tech and financials and small caps? It's crypto. So I think you're going to have a massive crypto rally as well. Well, I think people have dampened their expectations for Bitcoin because Bitcoin's been treading water. And there have been a lot of OGs, original Bitcoiners that are selling above 100,000. But it is still an underallocated asset class. So I think Bitcoin actually potentially can get to the high 100,000s, maybe even 200,000 by the end of the year. I think it's a big ask. But to me, what's more obvious is Ethereum can have a huge move into year end because even Cathie Wood wrote about it. She thinks stable coins have been cannibalizing demand for Bitcoin, and gold and tokenized gold is cannibalizing demand for Bitcoin. But stable coins and tokenized gold run on smart contract blockchains like Ethereum, and Wall Street is building, and Larry Fink wants to tokenize everything on the blockchain. That means Ethereum is where people are starting to raise their growth expectations. And if you're raising your growth expectations, then your discount to the future is going up. So I think that there's a bigger move in Ethereum. And Mark Newton, our head of technical strategy, thinks we can be like 9,000 to 12,000 by January. I think that's about right. I think Ethereum just 3,600 more than doubles between now and year end, or between now and January.
Bitcoin is sitting at a crucial make or break point, according to crypto quant founder Ki Jung-ju, who has issued a striking bull-bear forecast that has the crypto community watching closely. Jung-ju revealed that large holders, or whales, have sold billions worth of Bitcoin since it first crossed the $100,000 mark. This heavy selling has created a supply overhang, more Bitcoin entering the market than buyers can absorb, leading to a sharp 20 to 30% correction from its all-time high of $126,025. Jung-ju explained that the 2024-2025 bull cycle may have already peaked, but noted that inflows from institutional players and Bitcoin ETFs have prevented a deeper bear market. Without these steady inflows, he warned, Bitcoin could easily slip into a prolonged downturn as selling pressure builds. However, he also left room for optimism, suggesting a strong macroeconomic recovery or renewed ETF demand could reignite the rally. Currently, Bitcoin trades near $105,000 with increasing volume, a sign that traders are re-entering the market. Analysts believe the $111,700 range is the next flashpoint, where Bitcoin's next big move, either a breakout or deeper correction, will likely be decided. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free.